Yeah, if they fail to deliver, then what is the value of a contract that can't perform? And the answer is zero. And if you zero out a part of the derivative chain, now you have humongous winners and humongous losers. The problem is, if the losers can't pay the winners, then the winners become losers. And think about it from this standpoint. The world runs on credit, and credit is only forthcoming if there's confidence. If confidence breaks, if confidence is gone, and credit stops, nothing in the real world will continue to work.
According to financial analyst Bill Holter, the current state of the global economy reveals clear signs of strain that are pushing investors back toward gold and silver as the ultimate safe havens. He emphasizes that the overwhelming debt levels in both government and private sectors have reached a point where repayment through traditional means is impossible. Instead, central banks are resorting to endless money printing, quietly debasing their currencies to sustain an illusion of stability. Holter argues that this systemic manipulation can't last forever. Once confidence in fiat money collapses, the rush into physical assets like gold and silver will be unlike anything seen before. These metals, he says, are no longer just investments but lifeboats in a monetary storm that's growing more violent by the day. Holter points out that the paper trading system for precious metals, especially in the COMEX and London markets, has become dangerously detached from physical reality. The ratio of paper contracts to actual deliverable ounces is so extreme that if even a small percentage of traders demanded real delivery, the entire system could unravel. He sees mounting pressure as more nations, particularly in the BRICS alliance, move to settle trade in gold or commodity-backed currencies instead of US dollars. This growing trend threatens to expose the weaknesses of Western financial markets and could ignite a short squeeze in physical silver and gold, forcing a rapid revaluation of their true worth. Now, we present the clips from Bill's interview on gold price targets. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Well, frankly, we should have already had some sort of correction because gold and silver have been in the overbought area for quite a while. It would be logical that gold would stop at a round number of 4,000. It would be logical that silver would be stopped at the $50 number, which was hit in 1980, again in 2011. And of course, the alternative is gold and silver just blow through those numbers. First off, I think it's important to understand that it's not just monetary and fiscal policy that has lit the fire under the metals. You go back to October of 2022 when the 300 billion of Russian reserves were confiscated. The following day is when gold started moving. I think we were, 1670 to 1700 at that point, and it's gold has really been a tractor in first gear. We've not had anything more than a 10% correction during that entire time since late 2022. Silver has been mentioned as a strategic metal by Russia. It's been mentioned as a strategic reserve by the United States. India, just recently we found out that they've doubled their imports of silver, not in dollar or rupee terms, but in physical ounce terms. So the supply-demand situation on silver is very tight. And I don't know if this is because of year end, but there's reports of a lot of mints around the world are out of silver. They're not releasing silver. Now, I don't know if that's because we're in the final quarter of the year and they're not making any more 2025s. If we were a week or two into November, I would say that's the reason, but I think this is too early. And my thought process, frankly, coming up to this number that we're at now, very close to 50, my thought process was wondering, will we have a failure to deliver and that blows silver through 50 and wipes the system out? Or do we get through 50 and then all of a sudden the amount of blood in the water, the sharks go crazy and blow it through 50 and create a failure to deliver. I don't know which comes first, the chicken or the egg, but I've been on the record for quite a while, close to 10 years now, that there'd be ultimately the finale would include a failure to deliver of both gold and silver. And it's always been my thought process, because it's such a small market, that silver would be the one to go first. So I don't know. We're in uncharted. I think they are pointing to a crisis. And I think it's really important to understand that if and when silver or gold fails to deliver, that will take the entire system down within 72 hours. This is not playtime anymore. We are at the end of an empire. And I mean, the question is, where does the failure start? And I mean, it can start from anywhere. I mean, we could have World War III tomorrow morning. You could have banks going under. You could have derivatives blowing up. I mean, there's so many different potentials to blow this thing up. And I think if you're looking at it from the standpoint of, we've got a year, 3 years, 5 years, I don't think that's even possible at this point. This thing is going to come to a head. And I mean, everything that the BRICS has been doing, that tells you right there that the world is moving away from the dollar system. And the dollar system is a Ponzi scheme. And the thing about a Ponzi scheme is, once you shut off or slow down the new money coming into it, it implodes. And the new money coming into dollars, it's definitely less, and very well could be negative, because you've got the rest of the world turning away from dollars and wanting to be in a system where there's free, fair trade settlement. I mean, foreigners are sick and tired of shipping widgets and getting dollars in return, because dollars, there's people out there way smarter than you and I, Gary, that have figured this out, and they figured it out before you and I did. That they're getting nothing for their something, and that's not the way people want to trade. That's like if you want to call it anti-capitalism. It's hegemonic. Yeah, if they fail to deliver, then what is the value of a contract that can't perform? And the answer is zero. And if you zero out a part of the derivative chain, now you have humongous winners and humongous losers. The problem is, if the losers can't pay the winners, then the winners become losers. And think about it from this standpoint. The world runs on credit, and credit is only forthcoming if there's confidence. If confidence breaks, if confidence is gone, and credit stops, nothing in the real world will continue to work. You won't have shipping, you won't have distribution, you won't have production, you won't have anything. And as far as my 72-hour comment is concerned, how long can a person go where every morning you wake up, you're only 72 hours away from anarchy? And I say that because if people don't eat for 3 days, you're going to have anarchy. And if credit breaks, you're not going to get a loaf of bread to the store. You're not going to get tomatoes or beef or anything else to the store. And I've said this for years. The world runs 100% on credit. There's virtually no cash and carry. I mean, think about it. Think about your Walmart. Think about your grocery store. They work on 30, 60, 90-day credit. Think about builders. Think about your trucker. How's he going to get fuel if the gas station and the fuel industry lose credit? Then the fuel's not running. If the trucker doesn't have credit, he can't fill up his truck. Nothing moves. Everything will grind to a halt when credit stops.
In Holter's view, gold is quietly re-emerging as the backbone of global trust, while silver, often overlooked, is positioned for explosive growth. Industrial demand continues to climb, and as more investors recognize silver's dual role as both a precious and industrial metal, supply could quickly tighten. He believes this imbalance will lead to a dramatic surge in prices, especially once the public realizes that most of the world's silver inventory is already spoken for by manufacturers, mints, and central banks. For Holter, silver's rise won't just mirror gold's. It will likely outperform it as the market wakes up to the scarcity and necessity of the metal. Looking ahead, Holter warns that the world is on the brink of a financial realignment where tangible assets will once again determine global wealth and power. As trust in paper instruments evaporates and fiat currencies weaken, gold and silver will become the anchors of a new monetary order. He envisions a time when the real price of gold and silver isn't dictated by futures markets, but by physical availability, barter demand, and national reserves. In that future, those holding real metal, not paper claims, will stand on the winning side of history as the world transitions from a system built on promises to one built on hard value and scarcity.
Shortly.
Well, you're already seeing that massive wall of debt come due. Look at the subprime. Look at subprime. Look at commercial real estate. Look at auto loans. Matter of fact, I was watching baseball last night, and I hadn't seen an ad like this in years, but they ran 4 or 5 times. They ran an ad. Are you behind on your mortgage? If you're behind on your mortgage, call us. We'll help you restructure it, blah, blah, blah. I haven't seen one of those ads in years and years. Look at the traffic flow going through Las Vegas. Everything is shrinking. And what that tells me is we have 2 economies. We have the financial economy and the real economy, Main Street. And money is getting scarce on Main Street. And we've seen this. I've seen this. Precious metals dealers have seen this. There's been massive selling for the last 9 months in North America. And I pretty much ask every client, why they're selling. And 90+% is because I need the money.
Yeah, so they're paying bills basically here, right, is what you're saying.
Exactly.
Yes.
Well, I think the key is in your question, I didn't hear New York or London. And the reason being, the rest of the world understands that it's a fractional reserve system, and they don't want to store in New York. They don't want to store in London. They don't trust the West. Ultimately, when trust breaks, what do? You get a currency. And also sovereign treasuries that go lower in value because confidence is lessening. And that on its own yes, but this is the end of, it's the end of this system. It's the end of fractional reserve. It's the end of, the U.S. has a credit card with an unlimited balance on it. It's the end of all that. If you go back to 1933, when the gold was confiscated, and then shortly thereafter they revalued gold up 70+% from $20.67 to $35. That actually, it reflated the system, if you will. When I say reflated the system, it made the collateral itself worth more so that there could be lending, that there was room for lending. When Nixon went off the gold standard, the gall was taking $35, sending it to the U.S. and saying, send us an ounce of gold. There was inflation already embedded in the system, and investors knew that, and that's why they wanted gold rather than dollars, because a dollar has long-term only one trajectory, and that's downward, because it's freely printed. It's printed by man, as opposed to gold, which is created by God and has an absolute limited supply. You have to use capital, labor, and equipment to create a 1 ounce round or a bar or whatever.
Looking into the future, Bill Holter's outlook paints a picture of a financial world undergoing a dramatic reset, one where gold and silver become the backbone of a new era in global trade and value storage. As fiat currencies continue to lose purchasing power and nations increasingly turn away from dollar dependency, the true worth of tangible assets will begin to shine through. Central banks, which have quietly been hoarding gold for years, will likely play a major role in this transformation, using their reserves as leverage to redefine currency systems around physical backing rather than debt. Silver, too, is expected to break out of its historical shadow, driven by growing industrial use in green energy and technology alongside surging investor demand. Holter foresees a period where the gap between paper and physical prices will close violently, forcing markets to reconcile years of artificial suppression. In this coming financial reality, wealth will no longer be measured by digits on a screen, but by the possession of assets that cannot be printed or manipulated, a return to hard money principles that could reshape everything from trade agreements to individual savings. If you found this analysis valuable, don't forget to hit the like button, subscribe to the channel, and share your thoughts in the comments below. Your engagement helps bring these critical discussions to more people who need to hear them.